And China's producer prices sink more than expected. Prices are down 5.4% in June year-on-year, weaker than the street estimate of a 5% decline versus the 4.6% decline in May. To discuss this further, I'm now joined by Manish Singh, who's the Chief Investment Officer, Crossbridge Capital. So Manish, thank you very much, first of all, for joining us this evening on ET Now.
Hi, Sumita.
So Manish, a few days back, China reassured that economic growth is on track, that there are many favorable spots despite some pressures and difficulties. But the data that's just come out seems to be claiming otherwise. What's your take? And that further dampens investor confidence, doesn't it?
To some extent, though, it should not come as a surprise if you've been looking at last 6 months' data. So the PPI number has been negative for at least 3 or 4 months now. And this is just confirming things that we have discussed in the past. I have discussed with your colleagues, is that if you look at the negative number that you've seen in China, it's a warning sign that where we are heading next in US and first in US and then in Europe. Because as I have repeatedly said, that disinflation is the problem, not the inflation. I think inflation is behind us. We will get the US CPI number on Wednesday, which is likely going to be around 3% on headline basis. And if you look at the last 9-12-month data, then inflation is just not there. Of course, it's higher than 2%, but it's not at 9.1%, which is what we saw in June last year. And this is just feeding into that we are going to revert back to the pre-COVID days when the supply chain and everything reorients and the productivity or the efficiency of producing things just keeps going up with time because of use of technology. And then you're faced with, is there enough demand? I mean, you can produce things faster, but is there enough demand to keep the price level high? Now, that's not a bad news because you don't want to have higher inflation. But I'm of the firm view that disinflation is what the world is going to face. Inflation phase, in my opinion, is over.
Right. So you say that disinflation is a bigger problem than inflation as of now. But, experts are also saying that perhaps China at this point in time needs a more muscular policy to support recovery. What's your take on that? And can China's target GDP of 5% this year be met?
I think they can, because if you look at what China didn't do any of the balance sheet expansion that you saw in the US and Europe, right? So they have enough capacity to do that now when the economy demands it. So they can do both rate cuts and they can also do the balance sheet expansion, the central bank buying assets or spending money. Now, I don't think that they would just go straight for balance sheet expansion using central bank money or printing money. I think there is still a huge capacity that China has to invest and stimulate its economy. Now, they want these stimulations to go in the right sector, not in the property sector, because that does not benefit the whole economy as a whole. If you look at the Q1 GDP data that China had, the consumption increase was 10%. So what I would be keen to see how that is going to grow, because a consumption-led demand growth is exactly what China needs, or exactly what any economy needs, because that is more sustainable over the long term. And to do that, the government has to lead the way. So you are going to see a pointed expense from the government side of providing help. And that's what you're going to see next in China. And the key thing for investors to bear in mind was what was happening with Ant Financials and Alibaba. And we've seen a resolution on that. Of course, it has cost Alibaba $850 billion in market cap, but we've seen a resolution on that. So moving ahead, if they take a two-pronged approach of central bank easing restrictions or easing money supply, and on the fiscal front, government spending money, then that could reboost and get the. So China is still on track, in my opinion, to have a 5% growth for the year. Yes, that's still on.
So you're sounding very bullish, Manish, and also saying that all eyes will be on the consumption data. But switching tracks just a little bit, speaking of tensions with the US, Janet Yellen, while wrapping up her visit in China, called for greater US-China collaboration, also saying that it's the responsibility of both nations. What's been the outcome of that visit, in your opinion, and will it help ease tensions between these two superpowers?
So, Sumita, what I would say is that, a number one and number two are never best of friends in any sector, right? Be it in professional capacity or business capacity. So you're never going to see them getting together and dance around the fire and say everything is all right. It's just not going to happen. They have to find a way to work with each other. And that's what you're seeing at this time in this diplomatic visit that is happening on both sides. Clearly, US has understood that China is not like any other nation, or things that happened with Japan with the Plaza Accord. For people who have longer memory or have read about 1985, when Japan's GDP was almost half of the world, market cap, I believe, was half at that time. And those things may not repeat at this time, but then US was able to deal with Japan because US provided the security to Japan, the military security, and they could twist their arms and get things done. They can't do that with China. And China has its own plan. And given the strength that China has already developed, its independent internet system, everything. Look at, they have developed a parallel system when it comes to internet and technology. Now, those are powerful things. And also, they are doing bilateral trade on Chinese yuan, as you know. So US is dealing with a much competent and a much bigger rival than ever before. Even in Cold War time, Russia was never an economic power. But China is economic power and military power. So they have to get on. They will work and it's both in both interests, not just US alone. I think China cannot afford to get into a confrontation with the US. So they don't want to seek a fight. So therefore, I think that the grounds are there for both sides to come together and work in best interest, which is going to help both sides. And I think that's where we are heading. I've said that for the last 2 years, that you will see these nations trading with each other again and trading properly. And I think the realization is dawning on both sides that they can hurt each other very badly. And therefore, it is in their interest to cooperate and work together.
Right. So, Manish, thank you very much for that very, very comprehensive perspective on these two nations. So, ladies and gentlemen, as Manish says, US is in fact dealing with a much bigger enemy than it ever did in terms of China, much bigger rival, because China, is really, really going big as far as the tech competencies of that nation is concerned. But all eyes on the consumption data. But Manish over there presenting a very, very bullish perspective.